In the next 20 minutes, we'll introduce you to some tools. We'll probably actually over the next 40 minutes, we'll try to wrap this webinar up within 40 minutes or so. Some tools to add client value to help you double or triple your new client pipeline within 4 to 8 months. Of course, this depends on, the shape and form of your practice and your tenure in the industry and what you're trying to accomplish. But between website SEO and learning more about Social Security and there's a lot of opportunity in this area right now, so we intend to give you some good goodies to take home for the rest of the day and the rest of your career. So the agenda for this webinar presentation is with my Social Security approach, ClientFirst Financial. I've implemented what I call the 80-20, or what you've heard as the Pareto approach to Social Security. My conviction over the last several years is that by learning 20% of the most relevant Social Security income planning concepts, that you can resolve or solve 80% of your scenarios. So, trying to keep it simple. To keep it simple, you really need best-in-class Social Security software to, to learn the concepts and to help solve client problems. The two work hand in hand. So that'll be the first 10 or 15 minutes with me. Then we'll move into Brien on Social Security, niche marketing and website SEO, and then come back to me towards the last 10 minutes for some marketing and best practices tools for your practices. So Social Security income planning right now is a term I've borrowed from some other authors and thought leaders in technology world, I believe. It's a blue ocean opportunity. Right now, the public, pre-retirees and early retirees are very responsive and interested in this topic. Many of your center of influence partners, accountants, estate planning attorneys, human resource personnel, they're also very interested in this topic too, because their clients are interested in this topic. As many of you know, there's 10,000 pre-retiree and early retiree boomers reaching boomerhood every day, and everybody's living longer. That's the demographic. Currently we have very low interest rate environment from the stock market contraction in 08 and the subsequent labor market and economic contraction and pullback. So our pre-retiree and early retiree clients are working longer. Many of them are going to remain in the workforce for longer. So the hunt for income is simply on, no doubt about it. And we experience that every day when we're searching for good bond yields for our clients or good dividend yields. The hunt for income is on. So very few advisors, interestingly enough, are really positioned right now to provide Social Security income planning solutions for their clients and their center of influence partners. I coach advisors throughout the country, and many of them are consistently building assets real quickly and gaining more prospects. And I talk to them. I go, well, what is it? So number one, it's using Social Security and running with it. Number two is that nobody else in my community has embraced this or has gotten onto it. So they're first in and they're getting results. So this creates an uncontested niche market space for you, the financial advisor within your practice. So the Social Security issues that our clients and many advisors or center of influence partners don't simply understand is that often there are hundreds of thousands of dollars of additional lifetime income that a couple can obtain, or a single individual for that matter too, with divorcees and widowers and widows. Now when somebody chooses Social Security, they've got to get it right the first time. Up till a couple years ago, roughly, I believe it was in December of 2010, you could do over or redo your Social Security income election. So now you've got to get it right the first time because you only have 1 year to do it over. And so the messaging there is that get it right the first time. You've got 1 year to fix it. If you have a client that's claimed within the last year, you need to let that client know that we need to talk because you still have an opportunity to fix or do over your Social Security income election. Many clients just simply file too early. A whole lot of people out there just don't know what the spousal income benefit is for Social Security. It's the one unknown, or people just don't know about it. Commonly, one of the spouses will choose Social Security at age 62. This is one of the single largest disservices you can do to your surviving spouse. Women typically outlive men by 3 to 4 years. Women typically marry men a year or two older than them also. So we're commonly look at a woman as a widow for 5 to 6 years. So we want our clients and we want to take care of our spouses. So maximize survivor income benefit. Many clients don't consult with you or us, the Social Security income planning expert. They just hear from a friend that, yeah, we took it at 62, or, well, gee, we just waited to 66, or they just read an article that said, just wait and take it at 66 or 70, but they don't do the math. And good software is king for doing the math. Many clients don't claim Social Security in the context of their other investment assets, qualified and non-qualified plans. So, quite often, longevity or retirement income stream can be enhanced by many years, 6, 7, 8, 9, 10 years, or the size of a legacy or assets remaining can be enhanced as well by when and how someone claims Social Security, how they incorporate it into the retirement drawdown income plan. All right, so the Social Security octopus, what we have here is, Social Security is probably by many of you viewed as very complicated. There's a lot to it, but I'm going to show the software right now and then demo a tool that can help you learn Social Security income planning quicker and quantify or provide some numbers for your clients. And I'm going to try to keep this demo within 4 to 5 minutes, pretty quick. And if anyone at a later time wants a detailed demo of the software, I'd be glad to hold a call with you. If there's any problem with reception or the visual you're getting out there, just go ahead and type in a question or a message, but we should be coming across pretty clear on this webinar. So just give me a hoot if you've got some issues out there with visual or audio. All right, so we'll just jump into the software real quick. This software that I distribute is called the Social Security Analyzer Program. It was developed by Bill Meyer and Bill Richtenstein out of Kansas, the Kansas City area. Their company is called Social Security Solutions. The software is called Social Security Analyzer. So what I want to do is just pull up this one case, Jim and Linda Smith. We'll just view this case here, fairly quickly. A married couple, and across the software, the main toolbar is a home, new client, client list, some admin, a couple tabs, overview, analyze, compare, summary, published. So once again, I want to get to Brian's material here fairly quickly, so I'll try to keep this demo short and sweet. So we're going to edit client details. Jim Smith in this case is about age 62. Linda Smith's age 60. We pegged life expectancy for Jim at 85 and Linda at 90. And we can edit the basics here. So with the Social Security Analyzer software, in this case we have relationship status of married, but we can also analyze single or widowed or divorced. So we'll handle each of those scenarios. Let's leave married here. Altering date of birth, life expectancy. We have, once again, Jim at 85, Linda at 90. So anyhow, so there's some basic input. We can also key in data for children if they have children. We can also claim their current situation. So if one of the spouses has already started pulling their Social Security income benefit, in this case neither have, but we can put yes, that one spouse has already claimed, or the other spouse for that matter. So we can make edits or has functionality for that provision. Pension information, the software also handles the government pension offset and windfall election provision. So if you have clients that are, for example, school teachers or police officers, and they have not contributed to Social Security, and maybe at one time did work and had partial contributions to Social Security, the software will deal with the GPO, the government pension offset, and the windfall election provision. So anyhow, just backing up for a moment, we can edit the client's PIA, the primary insurance amount, or when they receive Social Security, typically at age 66, 100% of their benefit amount. We can key in that information there. So we can put in the projected age 66 amount. We can also put in an earnings history. If you want to customize a projected primary insurance amount, or if someone continues to work past age 66, we can key in the earnings history trail to get a more tailored amount. In some cases, you may want to do that. So we'll view some results for this case. Jim and Linda Smith, and there's a couple questions popping up about software and cost of software, items like that, and we'll get to that a little bit later in the presentation. So in this case here, the overview tab, we have a recommended strategy, or we can pull up data for claiming early at 62, full retirement age 66 or 70. But we'll stick with the recommended strategy right now. Here's a step-by-step. Jim files and suspends benefits, makes Linda eligible for a spousal. Linda files a restricted. I'm going to go through a table in a moment that shows that a little more closer, but there's a step-by-step procedure for the client to take their marching orders to the Social Security Administration. All right, so here's an analyze table, and in this case here, let me see here. Jim does a file and suspend roughly at age 68, saying he's going to take his benefit later, at some time later. In this case, he actually pulls it at 70 on his own record. So his delayed retirement credits bump up his benefit amount from $2,400 at age 66 to $3,168 at age 70. When Jim files and suspends, Linda then becomes eligible for a spousal benefit, $1,200, half of Jim's age 66 amount. She carries that income out till age 70. At that time, her own benefit has built up from $1,200 to $1,584. So she continues on her own benefit here out into the future. And when Jim passes at age 85, Linda inherits or takes his survivor benefit, goes from the $1,584 to $3,168, and carries that out till her life expectancy at age 90. Okay, so there's the cumulative annual benefits, $1,147,392 with the recommended strategy or the maximum benefit. So we can run a compare tab at this point. So we've got the recommended strategy versus age 62, where most people simply claim, and it's sort of laying up the difference of the recommended strategy versus the early. So here's a difference of, here's the early at age 62. So you can see there's a crossover point here right at about when he's age 78 and she's age 76, where the recommended strategy starts netting them more lifetime income. So the recommended strategy, providing the life expectancies play out, is that Jim and Linda capture $251,767 more total lifetime income benefit. That's all in today's dollars. We didn't run inflated dollars and future dollars with the Social Security COLA adjustments, but today's dollars. So that's a lot of additional income. So that's the table. Accountants, CPAs, they really enjoy seeing this in tabular format. So here's a graphic laying up the recommended versus early. So the normal life expectancy that we just keyed into the Social Security Analyzer program, age 62 would be $895,625, and the recommended strategy, $1,147,392. Big difference. Longer life expectancy, if they both live 10 years longer, even a larger disparity or larger income net gain with longer life expectancy. So there's a summary tab. Here's the total dollar amounts for recommended, early, full retirement 66, and delayed at 70. text format for the exact marching orders and detail on how to do that, and then for those different claiming scenarios. Publish, you can output a PDF report with your own financial practice branding. It runs roughly 16 pages long, but often it just makes more sense to key in on 2 or 3 pages, try to keep it simple for the client or the CPA, and customize that report for the client. So there's also some advanced features to the strategy too. There's the earnings test, so if someone's going to work between age 60 and 66, you can key in their annual income. You can adjust these life expectancies, and then redraw these benefit curves here. So anyhow, those are some additional features of the Social Security software. So I think what we're going to do at this point here is, I hit that pretty quick. I know it was a lot of stuff. But we're going to segue over to Brien right now, and he's going to go into search engine optimization. So go ahead, Brien.
Frank, so basically using that software that'll help you establish yourself as an expert in Social Security income planning. And now what I want to show you is how you can market that expertise and convert that to new clients. So how can you use that, get yourself in front of these clients so that you can show them this software and then have them hire you. So the problem is that a lot of advisors don't really have a unique selling point. So if I ask you what makes you different from other advisors, what's your unique selling point? I'll hear a lot of, we're just like most advisors, or we have such a depth of experience, or we have good, we really focus on service, or we have great technology. Unfortunately, that's not how people are going to be able to find you. There's not people don't search for the web for financial advisors with best technology. So you really need something that is going to help you stand out. And a lot of advisors then associate themselves with different certifications, and essentially this is putting you in different groups, which it helps because there's certain terms that people search for. Sometimes they search for CFP or fee-only advisor or NAPFA advisor, and that gives you some more leeway with marketing on the web. But it still doesn't make you stand out. You really associating yourself in a smaller club is not the way to make yourself stand out on the web. Good marketing is all about being different. So Steve Wershing did a great article for financialplanning.com where he really talked about how many advisors have the same problem, where they all try to establish themselves as being the best advisor and why they're the best, instead of why they're different from all the other advisors. So I have the link to that right on the bottom of the screen there. And also, if you want to download today's slides, I chatted that link out earlier, so you can go ahead and do that. So if we want to consider Social Security planning as a niche market, there's certain things you want to look at. Is it a growing market? Is it viable? And Frank touched on some of these topics here. Now, a lot of advisors kind of shake it off as saying that Social Security planning is a bit low end. Maybe the margins are smaller than other niche markets like 401k advising and so on. But it could bring in other business. It establishes a relationship. Really, anyone, it could be a different differentiator. So maybe they're not just coming to you for Social Security income planning. Maybe it's a very wealthy client who is trying to decide between you and another advisor, and you're the expert in Social Security planning. So that's just enough to kind of put you over the top and have them select you. Also, you're dealing with generally more elderly clients in this area, so maybe the husband passes away and they have a windfall of all the insurance money, so that brings other areas of business that can come out of that. So in many ways, this is a great niche market, and with SEO, for search engine optimization, it's, I would say, the best market for that, because there's just such low competition. So few advisors are really writing about this stuff, and so it's low competition, and there's such a high volume. So it affects so many people that the volume for these terms on the web, the search volume every month is in the thousands for over hundreds of different terms.
Brien?
Yes, Frank.
I'm sorry to interrupt, but we're getting a little input from the audience that there's a little sketchiness on the mic, hard to hear. Can you speak up? So if there's any adjustments you can make, and then if someone else can just let me know in chat, on a scale of 1 to 10, 10, 1 being that this is really, really bad and 10 is excellent, where's the audio coming through? Just so I can get a little read on that. So just let me know. Thanks. Sorry, Brian. Yeah, but I think you're
Sure.
okay for my end, but I don't know what they're getting out there. So
Okay, I raised the volume a little bit, so hopefully that maybe helps. Let's see. If not, just interrupt me again and let me know. So, what are some of the things that people are searching for on the web? These are some of the questions that I found just with a very basic search. Some of the things are, these are questions that people put on, generally on sites like Yahoo Answers and on Quora, and these public sites that really they don't know where else to get the information, so they put it there. And one way to get them to your site at first, if you're not ranking in search engines, is to answer the questions that you find on the web like this and have a link to your site for more information. So do a more detailed answer on your website, and then you can answer it in Yahoo or Quora or wherever you find these kind of questions and bring them to your site. But if you do a good job of really designing your website content around questions like this, then you'll be getting those people visiting your site instead of going elsewhere for their information. So a lot of the sites that answer these kind of questions are SSA.gov or different journalist sites as well. So maybe Forbes would do an article on it or so on. But really, the journalists aren't the experts. So that's really not ideal from a user standpoint to get their information from there. And a lot of web users don't like to use government sites because they find it doesn't really give a clear answer. It gives sometimes the official answer, but not in layman's terms, and it's often not very clear. So if you can do a better job of explaining, then you can start getting more visitors to your site. And if you optimize it well, your site will show up before these other competitor sites. So in doing some research, just in an hour or two of looking up Social Security terms, and you can do this through the Google AdWords keyword tool. And here you'll see these are just some examples of terms. And now we want to establish the difference between informational terms, terms that when you create content around it, it's going to bring people who are just looking for information, versus ones that are going to bring prospects, like Social Security Advisor. That might bring prospects more than something like a Social Security calculator would. But these lower competition terms that are more informational terms are still very useful, and it's going to be a key part of building the content of your site. So you see that most of these terms are low or medium level competition, and they have mostly in the hundreds of monthly searches, though there are some that get way into the thousands. Now, when I compare that to, we'll expand on that a little bit more. You can start breaking it into different categories of Social Security terms. So Social Security taxes, things that are related to taxes, ones that are related to spousal benefits or survivor benefits or widows, and then others about maximizing the benefit. People really want to maximize their benefits, and it's important, so provide them the information on how to do it with, of course, a call to action that you can help them if they contact you. And it just goes on and on. There's really hundreds of terms. I came up with about 200 terms just in a few hours of searching. And most of them, again, once you put it into Excel, the low to medium rankings turn into numbers. So you could really start comparing it a little bit better. And here you can see also in the last column on the right is approximate cost per click. That's if you were to buy the traffic through Google AdWords, it would be very low. And I'll compare that to certain other terms that advisors use to market themselves on the web, and you can see the difference in cost per click. So in the top section here, you have the general terms that some advisors use to try to market themselves on the web. And you often see this if they really didn't, I see this all the time when I'm looking at sites, and really if they either didn't know their SEO or they had a firm just load up a lot of keywords in there, you'll see general keywords. And really your chance of ranking for a general term like financial advisor, financial planner, it's very low. So these general terms really aren't going to help you. So who it does help is these terms are often purchased by paying per click by some more national firms. So often the Wall Street firms that have branches all over the country, they'll pay that $12 per click to get a visitor to their site. For most of you independent advisors, that's probably not feasible. And so you'll start looking at targeting geographically by city or state. And you see the competition is still very high. The cost per click, if you were to purchase it through AdWords, is still very high. These are really targeted, so this is great if you can rank organically, because you can save $12 per click. And ranking organically in the top 10 will really get, it can really get targeted clients to your site. But to get to the top 10 for these is very, very difficult. And if you don't have a niche market and you're just focusing on geographical terms, you're putting all of your SEO eggs in this one basket of geographical terms, and that's going to be tough. And it's really a losing strategy to only do that, especially if you try to do it yourself and not engage a good SEO professional. So this really shows you that yes, you can target these geographical terms and keep doing it, but you really need to have some niche market terms as well. So here we see I broke it down into just 4 sample niche markets. The top one being Social Security, the other one being doctors, physicians, then below that small businesses, and below that women and widows. And just from looking at which is kind of the best bang for my buck as a niche market, if I were to focus on one, it's pretty clear that the Social Security niche market really has the best low competition, low cost per click, high search volume trade-off. And that's because many advisors don't target it, so it's not going to raise the cost per click. It's a bidding system, so it's not going to raise it as much as it would for these other niche markets like small business planning. So now that just gives you an idea. So what you see here are broad keyword terms. I need to have this slide up so you can understand just a little bit without getting overwhelmed, or just to understand when we're using broad keyword searches for AdWords especially, it brings different results. So anytime for a broad search like tennis shoes, it'll bring anything before or after that. This really gives you like a chance for your total market. If you're ranking really well for some of these terms, this is kind of your total opportunity. But you also want to temper your expectations a bit by also checking the number of searches and the competition level for phrases and exact matches. So I won't get into that now, but just if you want to pursue this, you want to know that difference. So here we're looking at the exact phrases, people typing in exactly this information here, these words. And here I'm sorting it by cost per click. So I usually generally prefer, when I talk to advisors and they say, okay, what's better, paying per click with AdWords or SEO? And I say it's a trade-off. You want to look at both options and try to find where there's inefficiencies, where there's an opportunity, and sometimes AdWords could be better, sometimes SEO could be better. I generally prefer focusing around SEO, and then where it doesn't work, you analyze your results, and then you see where it didn't work, then you focus on AdWords for those terms. But the ones that you're able to rank for organically, you don't need to focus so much on AdWords. But it does make sense for something like Social Security planning because it's just such a low cost per click. So the competition is also pretty low for SEO, so I would look at it from both ways. But in the short term, you can set up an AdWords campaign and try to at least pay per click and get some visitors to your site as you develop your SEO. So here, when we sort it by cost per click, it really stands out as being kind of really the best bang for your buck. So that's why in some of the marketing material I've said that this is the most marketable niche market for advisors, because it really is. You're going to get a lot of people to your site and at a low cost and low difficulty with search engine optimization. And really, it's all about getting people to your site. You get them to your site, that improves your site rankings. You can create useful content for them that gets shared. So it's really that's the key. Now those competitor ratings that I was showing you, that's what Google provides. It's really based around their AdWords tool. So it's really your pay-per-click competition. It's different than your SEO competition. There is some crossover, like it's not fully efficient market. But if AdWords is very easy, SEO tends to be easy as well because people more pursue AdWords. But just so you see, to get the SEO competitor ranking, you need to dig a little bit deeper. So here I use the SEO Moz data, and you see a Social Security planning here is pretty competitive, but I used a general term. So I used the general term Social Security planning against a little bit more specific terms of financial advisor for physicians and widows, just to show you that you need to establish what are your competitive terms and what are your less competitive terms. And and look at the balance there, because as you do your keyword research, you want to establish your priority keywords, and those priority keywords are going to be supported by your low priority your low competition keywords. So you see, as you get a little deeper into some lesser competitive keywords, Social Security advice, you see that it drops significantly. So Social Security planning is just too general. There are a lot of sites out there that are writing about Social Security planning in general, but they really don't dig down into the specifics of it. So if we want to rank for more general keywords, I'm going to show you how to do that now. But as we've seen, the low competition keywords, all those questions that people have, all these informational questions, those are very low competition, and we can rank really well for that. And we're going to use those to help us rank for these competitive keywords like Social Security advisor, Social Security planning. So how do we do that? How do we target any keywords on your site to start being able to show up in Google when people search for you? You want to really limit the number of keywords that you're targeting per page. You don't want to go over 5. You want to try to really have your page revolve around just a few keywords. If you have too many, create a separate page and target that page around those ones. You want to have your most important keyword both in the URL of the page, in the page title, in the headlines, and throughout the text. Where possible, create some subheaders. So you're going to have maybe a main headline about Social Security advice, and your subheadings could be we're Social Security advisors who can help you with all of your Social Security advice questions. Now, that could be your subheader. So the point is to get that word in there as much as you can while still having legible text that people aren't going to want to click off because it's just loaded with keywords. You want to use it throughout the body, and you want to add an image to your page. It's going to help. Any kind of media is always going to help your ranking of your page if you tag it properly. So before you upload the image, maybe it's a picture of the Social Security, something with Social Security. You want to have that in the file name and in the alt text, because search engines can't see images. They can only see what you associate with that image, the description text, that means the alt text, the caption, and the image file name. The same goes for movies. They can't watch movies. Search engines are based around text. So your title of any kind of video that you make, the description, all that is what they can see. So to get an extra boost, you can start including some of these media things in your site. You can use a presentation or a couple of slides, have it uploaded to SlideShare, and embed that to your site. All these media items are going to boost your site above other sites that only use text. And the majority of sites only use text. So if all of a sudden, if it starts to become so competitive that you're competing with a lot of other sites for these terms, which currently you're not, so it's not really a big deal right now, but as the market develops and as more advisors start learning about search engine optimization, you really want to have some of these media things in your site. So create a basic video on YouTube, upload it to YouTube about how you help people maximize Social Security benefits, and you can demo your Social Security Analyzer tool. Once you have this video, have the description exactly about the video. It's not hard to create an optimized description, because if you're doing a targeted video, all you have to do is summarize the video, and that's your description. And that description, because it's a targeted video on a similarly targeted page, that is going to be enough to boost. That's going to be a well-optimized video, and that's going to help boost your site. So here's just an example using some sample text here. So if we want to, say we want to create a page focused around the term Social Security advice, maximize Social Security benefits, and those as the primary 2 terms. And you'll see here, I have it in the headlines, I have it in the page title, which is behind the scenes, what people see when they search in Google and find your entry there. What they click is the title, and the meta description is the description below it that will explain. It'll entice them to click it. It's really just kind of the description about your page. So you want to have it in there as well, but it should be trying to entice them to click. And then you're going to have it throughout the text. You can use the subheaders like you see with the H3. Bullets help, bold text helps, italics. And then when you link to subpages like that are more specific, like you see I did in the bullets there, link the words that say what the page is about. So this is called the anchor text. You don't want to say, to learn more about maximizing Social Security spousal benefits, click here, and have here hyperlinked, because that's telling search engines that your page is about the word here and not about maximizing Social Security spousal benefits. So That's uh, that's important. Those anchor links really tell search engines what that page is about. So, and also you want to have an image here, as you see on the right-hand side. That would be the file name with the alt attribute, or even better, a short video. So I hope I'm not moving too quickly. There will be a recording of this, so if you need to hear it again, you can check out that recording. If you listen to it slowly, everything's all there. But the question is now, how do you target some of these top priority keywords? As we saw, that the term Social Security planning is a competitive keyword. Social Security advisor is pretty competitive. So how do we get those top priority keywords? And we already know that maybe some of these lower ones we can start to rank for, like taxes on Social Security, or some of the really specific questions that people have. So let's create some sub pages on maximizing Social Security benefits, or on Social Security and taxes, or survivor benefits. And even if we wanted to, maybe sub pages of those sub pages. But the point is to create a hub. In this case, your hub will be your Social Security page. So it might be abcfinancialplanning.com/Social Security. And that'll be your hub for everything Social Security that you're going to write about. And on that page, you can link to your sub hubs, which might be Social Security and taxes, Social Security survivor benefits, and then those sub hubs could have very specific pages that answer maybe one specific question that people often have about Social Security there. And since the traffic to those sub pages is always going to go through that main Social Security hub page, you're really telling search engines that this is our most important Social Security page, and that page is going to be linked to from your homepage. And those other ones, maybe they're not going to be linked to from your homepage. So the only path to those sub pages is through your main Social Security page, which has those top priority keywords that are hard to rank for. So that's going to really be how those sub pages are going to boost that main page, which has your competitive keywords, and that's you're going to start to rank for these top keywords and really start to drive traffic to your site for the type of keywords that are going to be searched for by prospects, not just people looking to get some free information. So hope that was clear. That's about it. Frank, you want to do your thing now, and we'll take some questions at the end. And remember, the slide link to download the slides was chatted out at the beginning of the session.
Okay. Yeah. Thank you, Brien. Awesome job. Yeah, the audio became much better after that adjustment. So just seemed like there might be one individual out there that had a little trouble with the audio, and then we'll get you the recording. So within a day or two. So
Okay,
just kind of winding down here over the next 5 minutes, 10 minutes tops, probably 5 to 7 minutes. Yeah. So the Social Security Can Grow Your Financial Practice Toolkit is a toolkit that put together here at ClientFirst Financial. Simplifying Social Security and applying 20% of the most relevant concepts and claiming strategies will help you claim or solve 80% of your client problems. What I found, and the reason I put this toolkit together, is there was no visual method or technique out in the marketplace really describing to people how to simply learn and explain Social Security income claiming techniques and strategies to their clients and center of influence partners. So I put together a set of 3 DVDs and a CD data-ROM and a couple reference books in my ebook, How to Grow Your Financial Practice with Social Security Income Planning. The purple book is an excellent book by Bill Meyer and Richtenstein's, Bill Richtenstein, the authors of and developers of Social Security Analyzer software, showing teaching some basic Social Security principles as well as claiming cases. So the purple book's awesome. The Mercer Guide's a simple desktop reference guide that's real concise, tabular. The DVDs, DVD 1 is the core presentation. That's where I teach financial advisors, and I'm actually presenting the PowerPoint within the toolkit. And there's a technical drill down on DVD 2, more detail about Social Security. Learning Social Security is just like learning a language or studying stock options for the first time. So there's a certain language. Once you're familiar with it, there's some math and some concepts, but there's a bit of a language barrier, and moving through that quickly, with the toolkit in combination with some good Social Security software will get you there quickly. DVD 3 is a practice management technique, bolting on Social Security income planning to your practice. The CD data-ROM, 22 different data files on how to market Social Security income planning, tools to market to your clients and center of influence partners. and tools to bolt on Social Security income planning quickly to your practice. So once again, the CD data ROM, 22 different data files to get you up and running quickly and to market this in a simple, concise way to your clients and center of influence partners. The PowerPoint deck that we put together, in my opinion, is one of the best in the industries. Smart ways to get more Social Security income. You can brand that yourself, put your logo and branding. Social Security snapshot report. There's a couple examples in the CD-ROM, and once again, the Social Security software is separate from the toolkit, but you can import your own branding. Series of white papers and newspaper articles to announce to your practice and clients and centers of influence that you're in the business. How to reach human resource people, how employees can make smarter Social Security income, and how it affects their 401k, etc. 6 ways estate planners can help their clients capture more Social Security income, and 6 ways tax professionals. So those are some of the materials in our PowerPoint deck. And with my associate Martha Shedden, we've realized through hands-on experience and being out in the trenches that this is a huge topic for women. We've customized seminar invitations and many of our marketing and educational materials that women respond to this topic. They'll make the call-ins and reserve for the seminars. They'll be at the seminars. They'll be more attentive than the men on this topic. So it's a huge topic of importance to women, and we all know how women, because of their longevity and their increased activity in the workforce, and now women being, having the highest levels of college graduation, is my understanding from some of the stuff I read. You have to address this demographic, and we've differentiated ourselves within, our marketing niche and working with practice management, coaching, training financial advisors, that this female demographic is big, and that's one of our, differentiators in training financial advisors. So we've got a case here, for example, we call her Sally. If Sally were single and claimed at 62, she would receive a certain dollar amount. If she waits till age 70, based on her longevity, it's higher. If Sally's divorced and she effectively utilizes spousal benefit, switches to her own benefit, 70, even a bigger number. If she's widowed, collects her survivor benefit at age 60 and then toggles or switches to her own benefit at age 70, it's even a bigger number. And this is dependent upon each of those couples. Sally's primary insurance amount being $1,600 and her husband's P&A being $2,000. So anyhow, part of the toolkit. This direct mail seminar piece, coaching advisors throughout the country, has yielded on average about 1%, which may not sound high to you, but that's 5 to 10 times higher than traditional methods of marketing a financial planning seminar or investment managed seminar. And what's happened with a number of advisors is it's not just this response rate, and they were initially anticipating some, low to mid 6-digit level accounts, but many of them are running into $1 million plus households that are responding to seminars on this topic. And once again, that's going to depend on your demographic, the part of the country you're in as far as the response rate. But this mailer's worked, and I've worked with a number of advisors that were using other databases or direct mailing right out of their office in standard size envelopes, and we're plugged into a mail house on the East Coast that helps us with this. So we're getting some really good response rates on direct mail. Accountants, some of the niche marketing techniques that I've applied. Many of us work with accountants, many with attorneys. I chose to work with estate planning attorneys. Within the state of California, I'm a registered continuing education provider for attorneys on the topic of Social Security income planning. I've customized some ads that I run for the local bar association. My niche is being Social Security, working with a Medicare agent, portfolio diversification, life insurance audit, trust, 401k work. So that's some of the niches that we can carve out, and then using these, to gather more clients and prospects from referrals, of course. All right, so a couple questions about pricing for these different products and services. The Social Security Can Grow Your Financial Practice Toolkit retails at $339, And I believe in this product so strongly, and I haven't had a single one returned to me, that I provide a 90-day return provision as well on the toolkit. The Social Security Solution, Social Security Analyzer software is $750 for an annual subscription via the Social Security Solutions web portal. That's $1,200 direct from the vendor, Social Security Solutions, so a $450 annual discount for the software. So within the next day or so, you'll be getting an email or a heads up for your next step solution. If you'd like to talk with Brien about search engine optimization or more about the content of this webinar, check that box and email it back. If you'd like to acquire the software, hit this box, schedule a software demo, and I do demos all the time with financial advisors. Just give me a call or email, and we'll set you up with a demo for the toolkit or a complimentary coaching session demo overview. Get a hold of me, and if your time frame's more than 2 months out, just check that box as well. So you'll be getting an email in the next day or two on that. And any other comments or questions? Posted here is our contact information. Mine is email advisors@clientfirst.info, website www.clientfirst.info, or call me, my office, toll free 888-688-9080. And Brien, if you want to go ahead and state your contact information, any other final parting words here. We're at just about 50 minutes. I don't think we're going to have time for too many questions, but we might hit a couple. So go ahead, Brien.
Yeah, I didn't see many questions come in, so we're okay with that. Yeah, if you want to reach me, the steps that I do when I deal with a new client is I look at their website, I give them kind of an idea of what needs to be done to try to start getting new clients from the web. So it involves an analysis of where they are right now and where I expect they could be. So I like when advisors have some kind of niche market that they want to target. It makes my life easier so that it's not all around the geographical terms, though I have done sites like that where without any particular niche market just yet, and had some success there as well. So the first step would be to contact me. All of my prices are not listed on my website. You just have to drop me a line. I'll do an analysis. I'll send you a proposal and list out the cost structure.
Yeah, sounds good. Thank you, Brien. Yeah, a couple questions on the Social Security. Is that Tanya has a question. Do you use the software with seniors nearing retirement? My concern is that if I use it with someone in their 40s or 50s, where they may not receive their projected Social Security benefits because of solvency of Social Security or adjusting some of the full benefit calculation. Yeah, Tanya, I typically myself and the advisors I coach, we work with people in their late 50s or early to mid 60s that are coming right up against their claiming strategy. So yeah, good question. That's the common application there. And Bill had a question about public employees retirement system, PERS, which we have in California. I'm not sure if other states also have PERS or if they have another acronym for that, but it will handle non-covered pensions. So if someone's receiving a pension in which they did not contribute to Social Security or their employer did not, then the software will deal with that. Georgia had a question about full retirement age to file and suspend, and yes, you do have to be at full retirement age to file and suspend, age 66 for those born between 1943 and 1954. So yeah, thanks everyone for attending. Have a great fall. We're just a few weeks away, and hope you had a wonderful summer, and have a great day. And appreciate you being on the webinar.